We're here now with OSU Extension Livestock Marketing Specialist, Dr. Derrell Peel. And Derrell, there's been a lot going on in terms of politics recently. How has that been impacting the cattle markets?
Yeah, in the last couple of weeks, we've had a whole series of comments, statements, proposals, and so they've had a pretty big impact on cattle futures markets especially, but cash markets as well. And it's been sort of a piling on. One thing, there were a variety of different things going on, but all of them had a negative impact and kind of combined to really create a fairly big pullback in cattle prices.
Yeah, so has this been impacting every sector of the industry?
It hasn't been, actually. Feeder cattle markets have taken the brunt of it, both futures and cash. Fed cattle markets, futures markets were impacted through some of this, but actually cash prices didn't change very much, and boxed beef markets really weren't impacted at all. So it just depended on which sector we were talking about.
Yeah. So what do we see looking forward?
Well, markets are trying to recover. If it settles down a little bit, we don't get more headlines and more social media posts, markets will bounce back. The fundamentals of the market have not changed. And that's one of the things I keep reminding people is that, these are short-term shocks. Depending on exactly how they play out, the impacts probably won't be anywhere near like the initial reaction is. So the market fundamentals are still strong. Markets are already trying to recover. Probably take another week or two if they're relatively quiet at least, and the markets will bounce back, substantially to where they were before.
Yeah, that's good news. So what can producers do, if anything, to manage these situations?
We've talked about this before, but these kind of markets are very volatile. They're very subject to this kind of outside reaction, if you will, to politics or whatever. And so, producers have to think about when they're marketing cattle. We're still pretty bullish on the market in general, but you don't market on averages. You market at specific points in time, specific types of cattle. So you need to think about that ahead of time. And, flexibility is worth a lot in this market, because generally if you can wait a week or two from what you might have initially planned, the market typically recovers quite a lot. But also, it's good to use risk management tools, whether it's LRP insurance or something like an option market, to put some sort of minimum on these markets and be able to protect yourself from these short-term negative market reactions.
Yeah, and if people have any questions, they can always talk to their extension specialists.
Absolutely. We've got information in extension. There's insurance agents out there that can help you with some of this as well.
Yeah. And so last week we talked specifically about buying beef from Argentina. Have we seen any updates with that?
Well, we don't have any new data because the government's still shut down, but I think people understand now that Argentina is a very minor supplier of beef to the U.S. market. The changes that were made or proposed for the tariff rate quota would allow, if it was fully filled, about a doubling of the recent imports of beef from Argentina, but it's still going to be only about 4% or so of our total beef import. So pretty minor impact. Don't really expect it to have any impact on domestic prices.
Yeah. All right, well, thanks for the information, Derrell. And for more information, go to sunup.okstate.edu.